Welcome back to the Dividend Diplomat's YouTube channel. Bert and I are here to talk to you about two dividend stocks right now that you can buy in the week of August 24th.
Come on everyone, you know the drill by now. Smash that subscribe button, give us that thumbs up, and you know what, even ring that notification so you can get a new video delivered to all of you every time it's released.
We know what it's like right now as dividend investors trying to reach financial freedom. Right now with the stock market is uncertain right now. The tough economic stimulus package tension right now with the political sides, that's providing a lot of uncertainty amongst everybody out there in the community. On top of that, the S&P 500 is hitting all-time record highs.
It just keeps going and going.
All-time highs when earnings are really at all-time lows recently. And right now it just doesn't make sense, but that's what Bert and I are here to help you find at least two dividend stocks that you can buy for this upcoming week.
Yeah, so we spent this weekend digging through, running our stock screener. We each found one stock that we want to highlight and bring to you to invest during this week, as Lanny suggested.
Bert also said when he digs, we use the Dividend Diplomat stock screener. It's got the three critical metrics of the price to earnings ratio below the S&P 500, the dividend payout ratio that's less than 60%, preferably greater than 40%, and then that experience of long-term dividend growth history.
Yeah, so we're always here looking to make sure that we are investing in the quality stocks, and that's what we've designed our simple and easy to use stock screener to find. We are not encouraging you to buy stocks just for the sake of buying stocks. So that's why we wouldn't run a watch list, we wouldn't create a stocks to buy listing video without running that stock screener. Screens are set, we're ready to go. We've got our two stocks, we got the two stocks ready to pick from. I'll kick this one off, Lanny. What do you think about that?
All right, Bert, who did you end up then selecting for one of your stocks that you want to buy this week?
Yep, I'm actually looking at a sector that's pretty underrepresented in my portfolio. I'm heading towards the technology sector. My stock to buy is Cisco Systems, ticker symbol CSCO.
What do you like right now about Cisco? What's the price to earnings ratio looking like, Bert?
Yeah, their price to earnings ratio is just under 13. It's around 12.7x at the time of this video. And what makes it even better, Lanny mentioned we have that perfect dividend payout ratio range of 40 to 60%. Cisco's payout ratio is 43%. I see that number and my ears just start perking up. I get excited. I can't wait to run and try and potentially buy a stock in that range.
That is smack dead in the middle. I mean, as a dividend investor, the reason why that middle part is so perfect is because it shows that the business wants to give back almost half the earnings in the form of dividends, but yet they still want to grow. So they're keeping half of those earnings to help reinvest back into new business lines.
Yeah, and to take Lanny's point even further, Cisco has a great yield right now. They're yielding 3.4%. So we are getting a very nice reward, much higher than the S&P 500's current dividend yield of under 2%. We're getting a nice premium. It definitely beats our savings account rates from Ally, which are nothing. In fact, they're actually going down, which is infuriating because my cash is now only earning 0.8% interest in that savings account.
So Bert, why Cisco now? I know you like Zoom and taking bathroom breaks while you're on your Zoom call, so I see you're picking Cisco, which is a little bit different.
Yeah, Webex actually has that feature that automatically blocks that from happening. It senses it.
Wow.
Kidding, jokes aside, but what really got Cisco on my radar, they were one of Lanny's stocks to watch in August, but even further, after we produced that video and he wrote the article, the company fell significantly far off their 52-week high of $50.30 per share. So what happened during that time? Why did their stock plummet? They released their year-end earnings results, and the market did not like what they were seeing. In fact, Cisco showed that their revenues decreased year over year, their income decreased year over year, and the extra killer for the company, they lowered their forward guidance for the next year as well. So from the market's eyes, things were not looking great. However, when I started pulling open the earnings release, figuratively flipping through the pages of that online PDF, I was liking what I was seeing. The company, despite shrinking revenue, still earned over $49 billion in top line revenue. Further, their net income was still over $11 billion. So yeah, it may have gone down slightly, but that's still a ton of money being earned by Cisco.
Are you mooing over there? Is this a form of a cash cow?
Oh, I like where you were going with that one, Lanny, because I did not see that coming. But yes, Cisco is in fact a cash cow. As of year end, Cisco had over $11 billion of cash on their balance sheet. Well, you know what? Let's just calculate that current ratio quickly. That's one of your favorite metrics, Lanny. It shows you can the company pay their short-term liabilities with their short-term assets. If it's greater than 1, they can cover the liabilities. Less than 1, they can't. We love companies over 1. Cisco's current ratio is 1.7x.
Wow, pretty liquid. Almost as liquid as me when I go out to those nightclubs during the coronavirus time.
Yeah.
Kidding.
Or the coffee in this Dividend Diplomat coffee mug.
If you need one of these mugs, you know who to reach out to. We'll see what we can do. So Cisco, obviously, I really like the company as well. I've owned them. They're in my post, stocks to buy in a post-pandemic world, as well as my, I think, August dividend stock watch list.
Yeah.
Bert, is there anything else for you to add about Cisco?
No, I mean, they have a very strong historical dividend growth rate. Their 5-year average is 12%. Their last dividend increase back in February was very small. It was a little under 3%. So it's something I'm going to keep an eye on going forward. But historically, while they aren't an aristocrat, they've only increased their dividend for 8 years. You can see that company is putting this cash to work by increasing their payout to their shareholders.
Now we're going to get into my stock. It's time to dig in to see what I came up with for the dividend stock to buy this week. My stock is a company that has increased their dividend year after year after year after year after year after year, times that by 25 plus. In fact, they've actually increased their dividend for 29 straight years, Bert.
That sounds an awful lot like a dividend aristocrat to me.
Further, their stock price at one point for the 52-week high was nearing $200. And then now it's actually prices at below $150.
Wow, that is a very nice discount from that high that you were mentioning.
When I go grocery shopping, if I see bananas at 22 cents a pound, I am scooping up every single one of them.
Yeah, he will eat them all too in that week before they go bad too. And if you don't believe us, challenge Lanny to it. I dare you.
Yeah, you can check our new video about the banana eating challenge by me.
Yep.
When stocks are on sale, my ears perk up because I'm a frugal guy. I try to make every single dollar count. So this company of mine that I'm looking at is heavily discounted right now. Again, their stock price is lower by almost $50 since their high back in the early parts of February, and their yield has now swelled up to just about 3%.
Man, that is a very nice yield too. Again, like Cisco, a nice premium above the market and your savings account.
So what company am I looking at? General Dynamics, ticker symbol GD. This company is in that defensive arena. And most would actually have thought that, their contracts and their revenue would be declining and, they would be in a whole world of pain.
Is that the case though, Lanny? What are you seeing?
It's actually the complete opposite. Take a look at all of these contracts that they're winning. It's not $5 million contracts, $1 million, $10 million. We're talking hundreds of millions of dollars of contracts that they're still winning right now.
So think about that. Think of how crazy that is. That's a lot of revenue coming in the door. It's a lot of future net income, a lot of cash that can get continued to be returned to the shareholders.
So why are they now all of a sudden on my dividend stock watch list for a dividend stock to buy right now this week? Well, first, their forward earnings are looking very sound. That makes their forward price to earnings ratio less than 13, which is far below the S&P 500, which is trading at almost 29 to 30 times earnings.
That's a heavy discount to the market. That's right in line with where Cisco's PE ratio was as well.
Exactly. And then sliding right into that dividend payout ratio, here comes the safety. Here they are bringing it. They're at below a 40% on the payout ratio. And what does that mean? Again, they're looking at reinvesting back in their business as well as returning quite a bit back to their shareholders.
Yeah, and now, Lanny, we also know, as you mentioned earlier, they have a ton of room to continue increasing that dividend as well. So how have they been in terms of dividend growth rate?
Right. Well, unlike you, they're still on their growth spurt. So they actually just increased their dividend earlier this year by 8%. Their 5-year dividend growth rate average is 10%. And then with the payout ratio below 40, you already know that they're going to be able to increase that dividend going forward, and more than likely at a high rate.
Man, I really need to start eating whatever General Dynamics is eating, because I could get to the 6 foot would be awesome one day.
It's probably 4 pounds of bananas per week.
That must be the trick.
Again, if you find them at 22 cents a pound, shoot me a message.
Yeah.
So General Dynamics, below the S&P 500, an above average dividend yield, essentially almost 2 times what the S&P is currently yielding overall, as the market is around 1.7%. Consistent dividend grower. Again, as a dividend investor, this definitely adds a punch on your journey to financial freedom as well. Below the S&P 500, an above average dividend yield, essentially almost 2 times what the S&P is currently yielding overall, as the market is around 1.7%. Consistent dividend grower. Again, as a dividend investor, this definitely adds a punch on your journey to financial freedom as well.
Yeah, and I mean, quite frankly, Lanny, you've convinced me to keep a very close eye on General Dynamics as well, so thank you.
Son of a gun. You can't sleep at night without him trying to steal something from you. No, I'm kidding.
Yeah, you are allowed to purchase more than one stock in a week, one different type of company, but it's a different story. So hopefully, as you guys can all see, we have highlighted 2 very strong dividend growth stocks that are currently showing signs of undervaluation. I'll be watching Cisco, Lanny will be watching General Dynamics, and I will also now be watching General Dynamics.
Feel free to leave your questions and comments below in the description. We're here to hear your feedback, whatever questions you have. We love helping you on your financial freedom journey. Again, we're dividend investors. These are 2 strong dividend stocks that are growing their dividend year after year and have in fact already grown their dividend. So hopefully these are 2 stocks that you're willing to take a look at and maybe buy this week. Again, this is Bert and Lanny from the Dividend Diplomats.
Over and out.